Hello and welcome. I'm Janne Muta, Chief Market Analyst for TIOmarkets. Welcome to this bullish and bearish markets video. We're going to take a look at markets that are trending higher and trending lower. So hopefully this will help you in preparation for your trading, and maybe you can learn a couple of new things also. If you like what we do, maybe you can leave a comment or give us thumbs up. That would help us big time. And also maybe you want to consider VIP Black account. You get razor tight spreads, 0 commissions per lot, no monthly subscription fees. It's an amazing package. And please do remember that we don't provide any investment advice, and you should watch this video only if you agree with this disclaimer. Okay, the first market on our bullish list is USD Yen. As you guys know, we have been following this market for quite some time now. The market really is in uptrend still. Even though we have lost some momentum lately, the market hasn't violated the latest swing low here. And as you can see, we have 23.6 Fibonacci retracement. We have 20 period, i.e. 20-day moving average here, and this low. All these factors come together here, so this is a significant level or significant zone from 108.14 to 108.33. If this level breaks, then obviously the uptrend is over, and the next significant support is all the way down here, about 106.10 to 106.50. And this is another confluence zone. We have this high, used to be a resistance, now potential support. And we have 50-day moving average and 61.8 Fibonacci retracement. So market in uptrend as long as we stay above this low. If the market moves below this decisively, then the risk of market coming down considerably actually increases quite a bit. Bullish market number 2 is again USD pair. The market here has been moving sideways, so we have lost some momentum, but as you can see from the moving averages, we are in an uptrend. And should the market stay above this low here, stay above this confluence zone, which is about, say, 92.14 to 92.45, then the bull market is in force. So obviously now we're trading fairly close to the resistance, but if we manage to push through, then we probably have, in technical analysis, you can use sort of formation widths as a guide to how far the market might move next. So this is about 160 pips here, this range. So if we get a break above this high, then we're probably looking at maybe 95.30 or so. But obviously this isn't a promise, it's just a classical chart analysis suggesting this might be the case. If we break this sort of confluence zone here, then we obviously have a double top. So if the market comes down, if it breaks this zone and moves lower, then we have a double top. And then 160 pips takes us down to about this zone here. We have 50-day moving average, we have 50% Fibonacci retracement level, and we have this level that used to be resistance. All those are coinciding together in this zone, which is from 90.50 to about 90.66. Another market that has been making higher lows and higher highs lately is Dow Jones Industrial Average. Now, as you can see, the market rallied into this channel high and has been since correcting lower. Now, as you know, I do like technical confluence zones, and so I have marked those zones here also. The market is now trading at 23.6 Fibonacci retracement, and it seems to be reacting to the level a little bit. But I think, as always, if you're looking for more sort of reliable zones, you should take into account quite a bit of more information than just one technical factor. Here we have 38.2 Fibonacci retracement. We have this this high of 32.70.079. So this was a resistance and it's potentially now a support, and we have 20-day moving average there. So the range from 38.847 to this high of say 32.100 roughly, that's the zone 1. Zone 2 here around 50% Fibonacci retracement level and the 50-day moving average, and then we are fairly close to the channel low. This is obviously highly interesting and important zone. This is about say 31.286 to about 31.567. US oil is our first market in the bearish list. A lot of you remember that when the market was trading up here, we said that oil price has moved too fast and too far. So we suggested we might get a pullback now, and we gave you some support levels. Then the first support held a little while, but then the market created a lower high. So we suggested here on this day that this support could break, and if it breaks, then the market is likely to move to the next support, which was this green box. So this was pretty much picture perfect. We got it right, and then the market has created a failure high and another lower low. So at the moment, the process is market is making lower lows and lower highs. So it makes sense to bet this is the way things develop, unless the price action tells us something else. Obviously, there could be some news that hit the market and it turns into very bullish market, but at the moment this market isn't very bullish. It's on our bearish list as long as it keeps on making lower highs and lower lows. The resistance areas here, I'm looking at this used to be support, now it's penetrated, so there's a chance that the market can't move above this zone. But if it moves, the next resistance level or net resistance zone is from 61.50 or so to 62. 61.50 to 62 we have this channel high here, we have 38.2 Fibonacci retracement, and we have this reactionary high. So all these are factors that any bull, sort of oil bull, has to take into account. But obviously, if the news change, if the market becomes starts to favor demand side, if we have good news from the vaccine front, maybe then people start factoring in more economic growth. But we have seen a lot of up movement in the price of oil. So even if we rally from here, even if the market rallies up there, we are still within this sort of a potential market top. So if you trade long, just be careful. And but as always, whichever direction you trade, be careful and manage your risk well. Never trade without stops. Okay, here's a bearish market that we alerted you to in our analysis at TIOmarkets.com/analysis. If you haven't registered for our free emails and free analysis yet, please go there, TIOmarkets.com/analysis. So you get a daily email from us with my analysis there. Now, we alerted to the downside opportunity here because the market had broken this channel and it was trading lower. We suggested that the channel width sort of indicates the market might move to the 50% Fibonacci retracement or so, and now we are there. But the question is, do we have something solid underneath the market at the moment? And I don't see any proper support before the 61.8 and this historical high here, which is now likely to be a support. So the market is probably moving all the way down here. We obviously don't make any promises, but the market doesn't really have any good support before this. So that increases the probabilities of market moving to about 68 even, or say 68 to 68, 60. So 68 even to 68, 60 or so. If the market starts to rally, the next resistance area is about, say, or level, I should say, so 70.96. We had buyers there, buyers here, and now the market has penetrated the level, so it's likely to be a resistance level. Here we have a zone from this 23.6 to the recent high here and the channel low. So here we have technical confluence. If the market rallies anywhere up here, I think this is going to be a tough zone for the bulls to push above. So at the moment, it doesn't look likely. At the moment, the likeliest option is that the market is trending lower. So it's making lower highs and it is making lower lows. We are approaching this channel low here. Let me get rid of those. Yeah, so we are approaching this channel low. So this might be a technical reason for a bounce, but obviously we just have to follow and see what the price action does and trade along. So if we get a bounce from this, then there we have a resistance and then the channel, and here's the sort of the most difficult level for the market to get through. Here's another one from our analysis page, TIOmarkets.com/analysis. And basically, when the market was trading here, this is when we talked about this. We basically said that because the market has moved below this rising trend line and it has penetrated the support zone, we believe that this market is more likely to create higher lows and move lower, and suggested that it might move all the way down to this area where we have a couple of technical factors coinciding again. We have 38.2 Fibonacci retracement and we have this level that has been significant before. So the market moved there, has been rallying a little bit today. If we get a rally higher, it's looking at this technical picture, it looks more likely that it is going to create another lower high. And again, we can't promise it, but keep on following the price action, remembering that the market is not in an uptrend anymore, but it is creating lower lows and lower highs. So this is what this market looks like at the moment, and I'm going to give you one more, and that's it for today's video. Okay, here's our last market for today. As you can see, we have moved quite a bit lower since this range here. For some time it looked like pound USD was going to create and it was actually trying to create a bullish triangle here to stay in this uptrend. But then as soon as there was this close below the sort of upsloping trend line here, the bullish trend line, after that the bulls really didn't commit to this market anymore and the low here was broken. Now this range is about 220 pips. So now that the range has been broken, we get an indication from the width that the market might move all the way down to 61.8 Fibonacci retracement level. So looking at this, the area that used to support the price might be now resistance. So around, say, this low here, I would say around the 50-day moving average and the 38.2, maybe all the way down here, who knows. But this zone is potential resistance zone. And then another zone up here where we have the channel low and the recent highs. So I'm just going to give you quickly these zones, 130. So 37.79 to 38.40, and then 39.54 to about say 40.17. But at the moment the market is bearish, so we might still see lower reactionary highs, lower swing highs, and then further move down. Thank you once again for your time, and I very much look forward to seeing you on the next video. Trade safe as usual, never trade without stops. And if you want to learn more about trading strategies and about analyzing the markets, welcome to TIOmarkets.com/webinars, where you can register for the next free event. Thank you, take care, see you soon.